Good morning, everyone. In this lesson, we're going to find out and answer an essential question: how can you begin saving now for the future? Let's discuss the methods of saving. I am Marjorie Di Mailig, together with my co-reporters, Ann Nicole Bernal, Crystal Lizano, and Leonie Marquez. Have you ever tried saving money through a piggy bank? Parang halos lahat naman sa atin ay naranasan ng mag-ipon ng pera sa alkansya. Diba kapag meron tayong gustong bilhin na isang bagay or for emergency purposes, nag-iipon tayo. Iniipon natin yung mga binibigay sa atin ng mga lolo natin, lola, tito, tita, and then minsan yung mga napapamaskuhan din natin nung bata tayo. But try to imagine, the amount of money you put in there is still the same amount of money even you save for several years. At minsan pa, hindi safe and secured yung ipon natin. So let me introduce you interest rates on deposits, in which savings can earn an interest too. Banks and financial institutions usually makes money by borrowing money from depositors, using it to make loans and charge interest on it. And after that, they will pay interest on deposit. Like for example, let's put ourselves in Latania's situation. Latanya wants to buy a car. Gusto niya talaga na magkaroon ng kotse, pero wala siyang pera. Sinabi niya sa nanay niya, but her mom don't make enough money to afford it. So Latanya worked hard to save money, and then she opened a bank account and deposited nearly $1,000. At noong bumabagal na yung takbo ng trabaho niya, napapaisip na siya kung ano na yung nangyari dun sa diniposit niyang pera. How much interest her account has earned over the last few months. Ang ginawa nila Tanya na pag-deposit ng pera sa bangko ay isang matalinong desisyon, because aside from offering safety and security, many types of bank offer interest on deposits. So imagine, habang nagtatrabaho kayo para kumita ng pera at makaipon, yung pera nyo sa bangko is nagtatrabaho din at kumikita ng interest. Let's do the math. And put $1,000 in savings account that pays 3% in annual interest. How much interest will she be earned during the year? So $1,000 multiplied by 3% is equal to $30. So she earned an interest of $30 during the year, and her money in that savings account will be $1,030. Moving on to the factors that determine interest rates paid on deposits. The first one is length of time. The longer you are willing to leave the money on deposits, the higher the rate. The second one is policies. Interest rates also depend on the policies of the financial institution. The third one and last is the market rates of interest. It is the overall level of various interest rates charged by other banks and financial institutions doing business in the market. Let's further discuss market rates of interest. The Federal Reserve System has a significant impact on the market rates of interest. They manipulating the money supply and therefore the price of money or interest rate. Fed stimulates the economy or slows it down, and they also influences the interest rate market when it sets the discount rate or the interest rate it charges banks for loans. But hindi naman lahat ng interest rates ay nakokontrol ng Fed. Pero yung chance o yung tendency ng pagtaas o pagbaba ng interest rates ay dahil na rin sa Fed control rate. Moving on to liquidity, ano nga ba ang kaugnayan nito sa interest rate? So liquidity refers to how quickly you can convert something to cash without significant loss of value. Interest rates offered for deposits also differ depending on the level of liquidity the account offers. Accounts that offer a high degree of liquidity, that is the ability to take money out on demand, usually offer the lowest interest rate. So let's talk about types of bank accounts. Banks offer wide range of different accounts and services. The first one is checking account. Karamihan sa mga tao ay nag-o-open ng basic checking account because these are the most liquid type of bank account. Ma-access mo agad yung pera mo by writing checks or using an ATM. The money put into a checking account is sometimes referred to as demand deposits because it can be withdrawn at any time on demand. At dahil nga they are the most liquid type of bank account, ito rin yung dahilan kung bakit yung mga traditional checking accounts is hindi nagbabayad ng interest. And because of that, they are not a very good way to save money. Pero may isa pang type ng withdrawal account na much like a checking account, pero nagbabayad sila ng interest. This type of interest-paying demand deposit account often referred to as a negotiable order of withdrawal or NOW account. NOW accounts require you to maintain a minimum monthly balance or they pay higher interest rates if you maintain a certain balance. But, yung mga account na katulad nito, typically nag-o-offer lang sila ng lowest interest rates sa kahit anong deposit account. And meron ding penalties kapag hindi mo na-maintain yung minimum balance. But, NOW accounts are insured. Next is interest-bearing savings account. Withdrawing money at any time and pay a bit higher rate on interest of deposits than NOW account are the features of savings account. But even though they are still liquid, they do not provide check writing services. For this reason, people tend to have less transaction activity in their savings account. So generally, hindi sila madalas makapag-access sa mga account na tulad nun. So kung natatandaan nyo yung case nila Tanya na gusto niyang makapag-ipon, di ba? It's easier for her to save money because these accounts have lower liquidity. But of course, she also earned a relatively low interest rate.
And the next type is the Certificate of Deposit, or also known as CDs. CDs is a financial products offered by banks and credit union that give you a premium interest rate on your money. Kapalit nun ay ang pagpayag mo na hindi mo babawasan o i-withdraw yung pera na ilalagay mo sa kanila for a certain amount of time. At mga iba't ibang banks ay may iba-iba din na terms, but generally there are 3 months, 6 months, and 18 months, but they can go up to around 5 years. In CDs, the more na matagal mag-i-stay ang money mo sa kanila, the more natataas ang makukuha mong interest. And that's how CDs work. And kapag na-withdraw mo ang money na wala pa sa time na nasa agreement ng bangko, makakuha ka naman ng penalties. Next is the MMDA or Money Market Deposit Account. So this account are offered by banks and credit unions and also similar to deposit savings account. However, MMDA offer much higher interest rate than other savings accounts. Sa MMDA naman ay may kailangan i-maintain na minimum balance because in the savings, the more money you put in, the more you earn. At kapag hindi naman na-maintain yung minimum balance na sinabi ng bank, ay may penalty ka na matatanggap. But unlike CDs, sa MMDA ay pwede mag-withdraw whenever you want, but it has also a limit amount. What also good about this savings account, besides of it is a safe investment, it is insured by FDIC or Federal Deposit Insurance Corporation. And this FDIC, they generally earn interest at a higher rate than other standard savings accounts. And if ever nababankrupt ang bank na napili mo, FDIC can restore your money. Next is all about the credit union. Credit union are non-profit organizations that exist to serve their members. Like banks, credit unions accept deposit, make loans, and other services like banks offer. Even though bank and credit union work similarly, it is still different because of their goal. Dahil ang goal ng bank ay magkaroon ng profit. Dahil nga sila ay profit organization, while credit union goal is to serve their members rather than seeking to earn a profit. Credit unions are unique because they're member-owned. Dahil kapag nag-deposit ka ng money sa credit union, you are both customer and also an owner. Sa credit union, they use your money and other member deposit to make loans to other credit union member, much like a bank. And also, what's good about credit union is that they offer better rates on saving products and low interest rate on loan products. Next is the EPY and the saving options. So, before investing money, of course, it is necessary to learn first what is the different kinds of saving options for you to choose the best savings account that will truly help you to grow your money. It is very important to do comparing saving options and considering key factor that will make your investment appropriate. And you must need to know the APY or annual percentage yield. So APY simply, it is the real rate of return earned on an investment. So almost all savings account and some checking accounts have one. The higher it is, the faster your money grow. That's why it is very important to know your APY because you can quickly see what you'll earn in a certain period of time. Halaga na malaman natin yung APY natin kasi dahil dito malalaman natin kung talaga bang nag-earn yung money natin, talaga bang nag-grow yung money natin. And of course, it will help us to choose what is the right saving options for us. That's all. Thank you.
Next is the retirement savings option. Retirement savings option is the financial strategies of savings, investment, and ultimately distributing money meant to sustain oneself during retirement. Saving for retirement is a critical, but often neglected, part of a young person's financial plan. Fortunately, there are several investment and savings options designed to encourage and facilitate savings for retirement. We will briefly look at individual retirement accounts or IRAs, various pension plan options, and annuities. Individual retirement accounts or IRAs is a type of savings account created by a government to encourage people to save for retirement. And to ensure that people use IRAs only for retirement, the government put limits on when you can use IRA funds. There are two main types of IRA, traditional IRA and Roth IRA. In the both traditional and the Roth IRA, the max you can contribute to it is $6,000 per year as of 2020 and $7,000 per year if you're over the age of 50. Now, one thing to note is that you cannot contribute $6,000 each to both Roth and traditional IRA. In other words, the max contribution is $6,000 across both accounts. But you cannot split them however you like. I would say though in the most cases that people tend to stick with one or the other. And lastly, you need to have earned income to contribute to this. Now, let's proceed to the difference between traditional and Roth IRA. The biggest difference between them is the manner in which they are taxed. In traditional IRA, contributions are tax deductible. When you do withdraw, you will need to pay taxes on those at your ordinary income rate at the time. Individuals can make pre-tax contributions in the investment in the account growth tax deferred. In retirement, the owner pays income tax on withdrawals from a traditional IRA. And the last thing you should know is that it has required minimum distribution or RMDs. In traditional IRAs is that you are required to make withdrawals from them starting at the age of 70 and a half, but you can also withdraw from them voluntarily after age 59 and a half without penalty. Of course, you can always withdraw earlier with a penalty of 10%, but most of people would not do that unless they want to cover an emergency. If you think your tax rate will be more in the future, either because you're working more and have a higher income, or if you just think the government is going to increase tax rate overall in 30 to 40 years, then the Roth IRA is right for you. The Roth IRA is different than the traditional IRA because whatever earnings you get in the Roth IRA are completely tax-free when you withdraw them. You found your Roth IRA with money that you've already paid taxes on, and it can be withdrawn anytime without penalty. Lastly, let's talk really quick about income limits. The Roth IRA cannot be contributed to it. You make too much money. If you make more than $139,000 a year single or $206,000 combined married, you cannot contribute to Roth IRA. But there is one way to get around this, and it's a backdoor Roth IRA.
Good day everyone, I'm Yoni Marquez and let's continue the discussion. Employer-sponsored retirement plans. Ito ay ginagawa ng mga employer para tulungan kang mag-ipon para sa pagre-retiro. At madalas din itong ginagamit bilang panghikayat sa mga dekalidad ng mga empleyado. Dahil kahit sino naman na naghahanap ng trabaho, isa sa hinahanap ay yung may magandang benefits na makukuha in case na magretiro na sila. Employer-sponsored plans come in two main forms, the defined benefit plan and defined contribution plan. There are many variations within each category, but in both cases, hindi ka magbabayad ng mga tax sa mga contribution at mga kita hanggang sa magretiro ka at magsimulang mag-withdraw. Pag sinabi nating defined benefit plans, ito ay isang plano sa pagre-retiro na ini-sponsor ng employer, where employee benefits are computed using a formula that considers several factors, gaya ng haba ng trabaho at kasaysayan ng sweldo. Now, let's talk about pension plans. Pension plan is an employee benefit that commits the employer to make regular contribution to a pool of money na nakalaan upang pondohan ang mga pambayad na ginawa ng mga karapat-dapat na empleyado pagkatapos nilang magretiro. Next is vesting. It's a legal term that means to give or earn a right to a present or future payment, asset, or benefit. Halimbawa, maaaring kailanganin ng isang manggagawa na magtrabaho para sa isang employer para sa 5 taon bago ganap na ibigay at karapat-dapat na bawiin ang buong benepisyo. Second form of employer-sponsored plan is defined contribution plan. Dito, the employer contribute to the employee's retirement account, ngunit hindi ginagaranti ang isang particular na benepisyo sa pagre-retiro. Ang ganitong mga plano ay kadalasan nag-aalok sa empleyado ng ilang kontrol kung saan namumuhunan ang mga kontribusyon. Nakapaloob dito ang 401k over 403b plans. Ang 401k plan ay inaalok ng mga kumpanyang kumikita sa mga karapat-dapat na empleyado na nag-aambag ng pera bago o pagkatapos ng buwis sa pamamagitan ng pagbabawas sa sweldo. Ang 403b plans ay inaalok sa mga empleyado ng mga non-profit organization at gobyerno. Next is annuities. It is a type of financial product that guarantees annual payments sa may-ari para sa takdang panahon or for a person lifetime. Annuities come in two forms, fixed and variable. Fixed annuity, the return and ultimate payment ay isang garantisadong halaga. At pag variable annuity naman, the return and ultimate payment depend on the performance of investment. One word of caution, most annuity have very high fees associated with the initial sale that goes to pay the people who sell them. Also, annuity have fees known as surrender changes for early withdrawal.
That's all. Thank you for listening.